jumping straight into the market and the prices, we do have the 10-year US bond at 4.1%. So it is starting to spike back up a little bit following the Federal Reserve's big decision the other day, which we're going to just discuss here in a moment. And we do have the dollar. It did rise back up, but very significantly here, what we are seeing with the dollar, it is making lower highs. Now we will be tracking this because nobody knows what is going to happen next. However, if you zoom out a little bit on the daily time frame, we can see it looks a little bit like a bull flag. So it has pumped up and then kind of gone sideways along here. Anyway, regardless, we will be following what happens with the dollar. This is all because of the Federal Reserve's big announcement this week. It was a different kind of pivot from the Fed that everybody was expecting. So we did have the soft pivot already occur from the Federal Reserve. That was when they started changing their language, that they would maybe be softening the interest rates. But anyway, they shocked the markets by coming out today and bang, making a huge impact by basically saying to everybody, no, we are going to continue raising interest rates at a dangerous and alarming pace, of course, causing everybody's assets to sell off again, once again, and causing the end of that 1 week or so long market rally that we had with Bitcoin, crypto, and all of the stock markets last week, guys, as we were talking about. So everybody expected this pivot to happen from the Fed, but they came out with a massive rate hike, 75 basis points, and it did cause the value of the dollar to spike back up again. But however, very significantly here, it did make a lower high now, and it is starting to fall back down. The dollar is currently 112. It spiked up to 113, but it is 112.3 now today and coming back down. Now, as a consequence of this, we have seen all the rest of the markets react, as you can see, with a sell-off. So we had the Nasdaq. The Nasdaq is down 2%, S&P 500 down nearly 1% today. The Dow Jones also and the Russell 2000, all of them sort of heading lower. However, the Dow Jones is holding up the most well out of all of the US stocks because this is the stock index that has the most value in it. All of America's most valuable companies. So this would be the one that sells off the least in a long-term recession scenario. That is the dollar as well here. That is getting mainly affected and that is impacting all the rest of the markets. Now if we go down, we did have gold at 1650 today. So gold again is looking relatively steady. Gold had a massive sell-off after the Fed's announcement here. It went all the way down and hit its support after the Fed's announcement at 1615 and then bounced back up to 1650. And then we had silver rocketing up and down as usual. Silver is ready to absolutely explode as soon as there is a real hard Fed pivot, which we are still basically waiting for. We have seen it impact also currencies. We have seen the pound get massively shocked and then start to collapse back down here. We also have some news coming out of the UK which has impacted this, and we are going to go over it next here. And the euro is coming down as well. But just before we go on to the UK news and how that was affected by this Fed announcement, the Fed has announced to raise their interest rates by 75 basis points, and so has the UK Bank of England. But let's talk about the dollar milkshake theory before we go over that. Now, why is the dollar constantly rising and rising and rising? If we go on the long time frame, we can see that the dollar has been having this massive pump all the way back for like a year and a half. It's just been exploding up to higher and higher highs, all the way up to 115, which was its high. Now, we had this huge market rally last week. It came down. It has hit all the way down as low as 109, as we discussed on the previous video. Guys, if you want to find the information, follow us on HotCuppaCrypto and check out the previous videos. And now it's pumping back up to 112. So the dollar milkshake theory is this idea behind this huge long-term dollar bull run that as central banks around the world tighten their monetary policy slower than the Federal Reserve. So the Federal Reserve is the one that's raising interest rates higher and faster than every other central bank. All of the liquidity and investment from around the world will get sucked up through the straw of the milkshake into the US dollar. Basically, America is sucking up everybody's delicious milkshake. In this case, the world's money, right? Everybody's money and the world's liquidity is getting drained into the US dollar as the US steals all of the goodness out of the world and sucks it in all for themselves, being greedy as usual, as the US usually is here, guys. So, I mean, that's not really news. But the idea of this dollar milkshake theory is that it will continue until there is a significant change in the Federal Reserve's interest rates. They have started talking softer on it, and then they came out yesterday and pretended to talk hard on it again, shocking the markets and making the markets dump, causing the dollar to continue pumping here. But as soon as that hard pivot comes, the Federal Reserve hard pivot, it could be any time now, guys, because the bond market is going to cause this hard pivot to happen. If this bond market continues to get out of control, as we can see, this is what caused them to do the soft pivot in the first place, where the 10-year US bond yield reached 4.3 the other week. It went back down to 3.9 after their soft pivot, but is currently already bounced back up to 4.1 now. So if this continues rising again, we can monitor the Fed and we can track and see how long it takes for this bond interest rate yield to rise before they do another pivot. And that could be possibly the hard pivot this time, guys. And that would be the end of the dollar milkshake, because the dollar wouldn't be continuously pumping up anymore. All of the liquidity would get sucked out of it as investors around the world globally lose faith in the ability of the US Federal Reserve to control inflation, therefore making the dollar less valuable and the dollar sell off, and that will cause a huge rally in all of the other assets essentially. So that is the dollar milkshake theory. It's very simple. It's not rocket science, guys. It's very simple. It simply depends on this dollar chart here. Everything, every single one of your investments, the stock market especially, and the crypto market, and even gold and all the commodities depends on this. If this dollar chart continues to rise, then the sell-off across the board will continue that we have been seeing. However, as soon as this dollar starts to dump, following a Federal Reserve hard pivot decision or a huge, emergency announcement for them coming out saying, okay, we're going to do new stimulus, new money printing, we're going to stop raising interest rates, even we are going to potentially cut them down, right? If we get a emergency scenario, or if we go into a deeper enough recession, then we will see this happening. And as soon as that happens, that would be the hard pivot that would cause the dollar to essentially collapse. And all of this is because the US has record debt, and if they continue to allow all of these bond yields, especially this 10-year bond yield, the interest on these debt levels to continue rising, there is a breaking point and it will become at extreme levels basically. So we'll be following that. If you guys want to know exactly when that happens, all you have to do is subscribe to the channel, follow the channel for future updates.